All right, everyone. It's the top of the hour, and I see people have steady stream have filed in. Again, just if you were a little bit on the later end of logging in, just a few housekeeping items. Please keep in mind that all audio on your end has been muted. So if you would like to pose a question, we do encourage you to do so. Ask them often and frequently throughout the presentation, but make sure you type those into the chat. I will be monitoring those throughout the presentation and posing them to our guest throughout it. So I will make sure we get to it. If I didn't get to it in one block, come back and just make sure keep things moving along smoothly. So with that said, today we are very pleased to welcome on Sami Chalfouh with Great American Bullion to be talking about the current markets of precious metal investing for retail investors, for investing in tangible precious metals, as well as some of the different products out there and how it functionally works, especially through the context of using an IRA. It's easy enough to kind of understand that, hey, precious metals have value. I could buy them and put them in my vault at home, or I own a gold necklace or a gold chain or gold coins or silver or whatever have you. But it's important to understand when we're looking at these from the context of a investment standpoint, especially for retirement plans, there's a lot more context that's needed. So again, we do very much appreciate Sami being on with us today. We'll just go through a few header slides just to get through a few items. My name is Alex Perny. I will be your host today. If you do have any questions, again, make sure you type those into the chat box. If you have questions on the IRA side of things, please reach out to me directly. I've been doing this since 2012, strictly and only in the area of alternative investments. So I have done millions of dollars worth of precious metal investments for clients, real estate, private placements, debt instruments, all sorts of interesting things through IRA. So if you have questions on that side of the equation, please do feel free to give me a call. I'm always happy to help one resource for you. We do need to read a disclaimer. Advanta IRA and our employees do not provide investment or tax or legal advice, nor do we endorse or promote any investment products. All information and materials for educational purposes only, and all parties are encouraged to consult their attorneys, accountants, and financial advisors before entering into any type of investment. Self-directed IRAs that we offer here are a great vessel for anyone that wants to utilize their retirement plan assets and not have to take a taxable or penalized distribution in order to be able to invest in these types of, quote, alternative assets. I always cringe a little bit when anyone says alternative assets and they refer to things like real estate and precious metals because, hey, the Romans weren't buying Microsoft and IBM stock. They were building things and conquering lands and investing in real estate and also making things out of precious metals. So again, in the context of what we do strictly offer an alternative investment platform for clients. But again, it's very tangible in nature. We have over 20 years of industry experience. We were founded back in 2003 and have strictly only been doing alternative assets for clients throughout that entire lifespan of our company. Currently, we administer over $2.6 billion worth of capital for our clients. And we offer dedicated account management for any and every single client that comes to us. You don't have to have a $10 million IRA to get that level of personalized concierge level service. Granted, we don't have too many people that have $10 IRAs, but even if you're starting out with something that maybe you only have $1,000, $2,000 in an IRA, you're just getting started, we'll give you the exact same level of great customer care and service that you need in order to be able to do these types of investments. And with that said, I'd like to turn it over to our presenter today, Sami. I'd like to give my guests the opportunity to introduce themselves. And please do keep in mind, if you do have any questions, type those into the chat box. I will be monitoring those throughout the presentation. And also, if you would like a copy of the slides, they are attached as a handout there for you as well. So with that said, Sami, take it away.
Thank you, Alex. Thank you for having me. Good morning, good afternoon, everybody. My name is Sami Chalfouh. I'm the founder of Seagull Technologies, LLC, and GreatAmericanBullion.com is one of our online brands. A little bit about Great American Bullion and our process, and then I'll dive into the how and why and what. So Great American Bullion is a bridge between online precious metals retailer, where you can go online and just buy direct for direct delivery or storage, but also you can have personalized customer support by calling our phone number, and our team will help you, will guide you through the the site, or we'll guide you through converting your IRA into physical metals IRA or any qualified retirement account. We also pioneered the gold savings plan for those folks that want to do a little bit at a time on a monthly basis. In the slide, you'll have the link to the website as well as our direct number listed. So essentially, people that come to Great American Bullion, they really are concerned about what's happening out there, and that's the purpose of our presentation, the current precious metals market. So they either will be buying gold, they can buy whatever products we have available. The way we have it structured is you can choose your asset, you can choose the size, and it's already sorted low to high, whether you're buying gold, whether you're buying silver. If you're doing IRAs, we have all the necessary information here online, including the paperwork here with Advanta. We already have a beginner's guide to investing in precious metals, which is a podcast we've done with Alex as well. You can click on it and listen to it if you'd like to. Again, similar to the disclosure that Alex had done, we are not investment advisors, we're not tax advisors, we're not attorneys. We are just a retailer that sells physical, tangible, precious metals. And we've been doing this for a long time. Over the span of my career with my team, we've sold hundreds of millions of dollars worth of precious metals. And I personally have over 16 years of experience within the precious metals industry. I started in 2008. Now, aside from the IRAs, we have the gold savings plan, which is on the site, self-explanatory. You can even submit an inquiry to find out how and all that, and one of our guys or girls will reach out to you to help. And last but not least, this is the most important section for folks that are starting out to get some clarity on why to buy, how to buy, and really what to buy. You can go to the site and discover, or call the number on the site, and one of our account reps will help you. Also, we do curate occasionally some news. You can see it on the news article. There's some news that we curate, and you can go see those if you'd like. But let's dive into why buy, right? So as you can see on the slide, some clients said they say, don't wait to buy gold and wait, or the best time to buy gold was over 40 years ago. When is the next best time? Well, it's today. Got gold and guns, right? You got to have them. It depends on where you are on the spectrum of believing you need to protect yourself and family. A lot of people say with their with their you're a family man or not, you need to protect your portfolio, you need to protect your family, and that's one of the reasons people buy precious metals: diversification, hedge, growth, and self-preservation, wealth preservation. What to buy is also on the site, as I shared with you earlier. It doesn't really matter to us what people buy based on their particular needs. Most people usually tend to buy smaller denomination assets, gold coins and bars and all that they can use for barter and trade. But we have everything large and small. And then again, as I shared with you, how to buy. You can buy direct online for direct delivery. We can store it for you, or you can convert your qualified retirement account, whether it's with Advanta or it's not with Advanta. You want to move to qualified custodians, whether it's Advanta or other custodians out there. So with that, yeah, this is the slide about the news. That every now and then we see an article that is important. I think you'll find it useful. We try not to overload this page with just too much news, but things that could affect the market. We think it should be here for folks to further discover. And with that, I will give it back to Alex after this introduction to see what kind of questions you guys have. I'd love to answer those questions.
Yeah, sure. So I think kind of the first area that we'd like to dive into is, what are the primary market driving factors right now? We see that gold is trading, near all-time highs. Currently looking at spot pricing around, $2,300 per ounce, and that's all well and good to look at from the aspect of the investor. But the old adage of buying low and selling high is what most people like to look at, and you can't trade on past performance of anything, but as I said in the intro to this, it's, gold throughout history has always been something that people derive value from. So anytime that there's something that people derive value from, it's something that can facilitate trade, it's something that can be a bastion and a store of some type of value and wealth. So really, what are some of the primary things that are driving the current, upward trend for precious metals? We certainly did see some, pretty good price fluctuation starting back in, December of 22, and then kind of going in and looking at what it did last year. But it's kind of been going up and to the right. We had some real peaks in April, and then it's coming down a little bit. But from kind of your perspective, what are the primary driving factors to the precipitous increases we've seen in at least the base pricing of in gold, and then we can kind of drill down into silver and other metals as well. But what's really kind of driving the market currently?
Thank you, Alex. There are a few factors, really. The number one factor is the geopolitical situation globally and locally. There's macros and microeconomic factors that are affecting the price of gold. Central banks have been accumulating gold, and they have increased their gold acquisition over the past many months due to the Ukraine war, due to the wars in the Middle East, due to concerns of Taiwan, China, potential conflict. Those are certainly affecting that. Also, there's over the past many years, there have been a trend by global powers and also other countries that to distance themselves from the US dollars because of our current monetary policy, where we're printing a lot of money, and that basically is diluting not only our internal money here, which is another factor, inflation, of course, but also it's diluting their holdings. So they say if they were being diluted, might as well go to a tangible asset. So that is a major factor. It's central banks acquisitions, geopolitical wars, and potential wars that might also, unfortunately, come to reality in the next few months to wars. There's also obviously the political environment, the election environment, the current government, the current political path that the current party is doing, and also the concern about the election, the upcoming election. All these are factors. Add to it inflation. I don't want to say hyperinflation, but I always look at the price of water and bread. These are the two basic elements, right, of consumption for us and for survival. So if I look at water increasing 60% on the retail side, it's not that the water became more valuable, it's actually because the dollar became less valuable, and similar to other commodities. So those are the major driving factors. There's also concern about our wealth, about government intervention into our pockets, and some decisions that are being done by whether you agree or not, but certain decisions are not being done by our current government with the best interest of the American citizens. So money spending, sending money overseas, rather than focusing on our own economy and supporting our own businesses and our own employees.
Okay, those are all definitely great points. Now, do these kind of factors really just hyper focus on gold, or is it a general market of precious metals? And when we're talking about precious metals, the context that, the big four that, at least we're concerned with on the IRA side are gold, silver, platinum, and palladium. Do we see a kind of a similar trend with everything? Because, when I look at stuff, I would always think, at least from my general thought, and correct me if I'm wrong, but there's such high industrial utilization of certain metals versus other ones that I'm always surprised I don't see, to pick on silver, don't see that going up at quite the same rate that I might be seeing gold going up. So do the factors that you just talked about really have as much bearing on the other precious metals, or are there kind of independent and tangential things that specifically focus on each one of those four metal groups?
Certainly, there's high demand on palladium and platinum and silver with regard, and gold, I guess, on all the four precious metals with regards to industrial utilization. But the industrial utilization is not affecting the market sentiment as much as the geopolitical and the other factors. And from a consumer or investor perspective, or even central bank and monetary policy perspective, only gold at a first degree and silver at a second degree are used as actual mediums of exchange. So a central bank could put $1 billion in gold, but while it could also put it in silver, it's the sheer volume of having that would be too much and perhaps prohibitive. So there's gold takes a first seat to silver. Silver historically has been correlated to gold with a 42 to 1 ratio. However, over the past many years, it's dropped heavily. So many could consider silver way undervalued at $26 vis-a-vis gold at $2,298 at the second. So you can see the major difference from 40 to 1 to almost 80 to 1 or 85 to 1 or so. So the short answer, the industrial demand fluctuates, between platinum, palladium, and silver, depends on technology. We've noticed that between 2011 and today, that platinum went from being 1.5 to 2 times the price of gold to being less than half the price of gold. Historically speaking, if you talk to people, say platinum, they think platinum is a better, a higher value precious metal than gold, but it's selling at less than half of the price. Why? Because of technology. The use of platinum for catalytic converters has been replaced by other uses and other technology, which put a pressure on its price because of less demand from the industrial use. So in conclusion, I believe there's need, and they do move up and down in a certain extent together lately. However, gold always takes the driver's seat with regards to appreciation.
Gotcha. Now it's all well and good to kind of look at this in the context of things that would potentially keep driving precious metals in an upward trajectory. And I think anyone that wants to invest in something would always like to, focus and say, hey, like here are the things that are going to keep it, moving in the direction of appreciation, because that's what all of us want, is something to appreciate it, ideally a higher rate than inflation. But it begs the question, looking at this from this context, what are some things that are at least maybe in the near future that could have the effect of price suppression or at least reduction in the overall precious metal markets? Because we've certainly seen it. Again, just looking at the the pricing going back into 2020, 21. It's $200, $300, $500 less per ounce at some points. So it begs a question: what are some of those market factors that you think currently could be on the horizon that could drop the price, or at least historically have always typically tended to reduce the price of precious metals on the open market?
I think gold is a strategic asset, aside from the supply-demand factor. And similar to oil and gas, it's a strategic asset. We see sometimes the price of at the pump drops while we're in situation that should warrant the price goes, because there's government intervention, and then there's international government intervention into suppressing the price. But those factors can only influence the price so much because of market demand and supply and market sentiment. So what affects the market from a market perspective, sometimes when you hit a resistance point, some people would want to take cash out, right? Right now, perhaps you can see people cashing out, which is great opportunity for those buying. When people are cashing out, the price could go down a little bit, which is great entry point for people. And because some people have held gold since the 90s and 80s, and it's a cycle, it's a life cycle of for portfolios, for people, new generations coming in. But if you zoom out from 1971, when gold was at $35 an ounce, till today, you will see the price fluctuate, go up and down. But as you zoom out, you see there's pockets. While it's going down sometimes, it on the longer range, it's consistently going up, right? So as you said, past performance is not an indicator of future performance, but we learn from history and we see it's not the price of gold. I always say it's the value of the dollar that affects that. If the government continues to print money, if interest rates change, all that will affect the price. Also, the sentiment. If folks feel that they are doing good, then they feel comfortable. They put money in money-making portfolios like stocks and other things. If they are concerned about the market and they want to hedge, then they will pull their money from the market and move to gold. Think about a couple of situations. You mentioned all-time high earlier, right? Mm-hmm. 2006, gold was at $600 an ounce. Now, all-time high at that time was in the 80s at $850, but since then was the second all-time high, 2006 at $600 roughly an ounce. The Dow Jones was about 14,000 points at that time, was also at all-time high. When the Dow collapsed, the market shifted. People then, what happened to them is that they moved their money from the market into some of it, and not all of it, of course, some of it into gold. We saw gold triple to $1,914 or $24 by September of 2011. So now, what happened in September 11? We have an all-time high at 1924. In 2011, forgive me, and September 2011, what happened? We have gold at an all-time high, but the Dow Jones now has collapsed, right? So what's the sentiment? Gold is high, the market is low, the market's going to start going up. So a lot of people started to get out of gold to move to the market, and gold prices went down all the way to 1,053 by 2015. The Dow Jones continued to go up. What we're seeing today with an all-time high of 23, it touched a couple of weeks ago or 10 days ago, 2,400. With that all-time high, we're seeing also the Dow Jones at 38,000 points. So what we're seeing today is what we saw in 2006, both at an all-time high. God forbid, and unfortunately, many experts perhaps predict that we're seeing a bubble, especially with the largest bond bubble in the world, and we're seeing a lot of concerns. If the market collapses, we potentially could see gold prices go to $3,000 by the end of the year, $5,000 in the next 3 to 5 years. And that's because of those dynamics. Now, if the market goes back again down and gold's prices is up again, money will probably move to gold back into the market, and the cycle continues every few years.
Okay, yeah, those are definitely great points. A few things that I kind of jotted down here that I'd like to get a little bit of clarity on is that anytime when it comes to people investing, especially every 4 years, like we have major executive elections here in the United States, and at least again, most of the people that are listening to this are probably going to be U.S. based. So at least historically, what kind of things do we see as far as the primary drivers of what typically happens in election years with precious metals? Do we see it as people kind of looking at it as the safe alternative and typically seeing prices bump and then scale back a little bit, or do we typically see not much correlation or somewhere right in the middle?
That's a fantastic question with regards to the election. So the reality is, we know that election years are very interesting for gold, especially if there's huge uncertainty in the market. And also, they just happen that the election season is around September, and September historically over the past many years, over 20 some years, has been the season where the price of gold peaks usually during that year. So with those two in mind, there's perhaps I don't know the future, right? I don't have a crystal ball, but historically, we see if there's concern about policies, regardless of who in the office is, gold prices goes up. If there's confidence in who's in the office, then the price of gold goes down. So we don't know what's going to happen. That's why a lot of people are bracing. There's a lot of rumors out there, and I do not want to speculate on rumors, right? But this is going to be a peculiar year. It's a very interesting year, and I think people should, wish or hope for the best, but prepare for the worst. I think it's best to be positioned in a good position with regards to diversification. Again, you're not putting all your eggs in one basket, but having some gold in your portfolio is essential.
Gotcha. Now, another part that needs to be brought up is at least, pursuant to like the current market conditions. We've kind of covered, market volatility being something that drives it, inflation, market performances definitely being things that are all affecting to drive, gold to, basically, for to oversimplify, it is trading at all-time highs right now, within the context of where it has been. This is, again, kind of rare air. It's not like dropped down to what it's been, over the past, if you were like 5-year averages, it's not like it's just, one big peak. It's, it is at the height of, where it is, and where it goes is certainly anyone's guess. Hopefully it continues to rise. But when it comes to things that are changing outside of the borders of the United States, what are some big things besides global conflict, what's happening in Ukraine and Israel? Like, it's notwithstanding just large militarized conflicts, what are some kind of macroeconomic or at least governmental positions that are changing? Because I know that there are certain countries that are now no longer putting as much faith in storing their precious metals abroad and are trying to bring some of those things home. And whenever you have physical movement of assets, it's going to affect pricing and different people getting eyes on it. So maybe if you could speak a little bit about what's kind of going on a governmental and macro level, external from the U.S., again, notwithstanding armed conflicts that might be affecting pricing of gold in general.
Absolutely, thank you. So, and obviously, I speak to clients myself on a daily basis, and Great American Bullion does deliver globally. So we deliver to Singapore, to Dubai, and we deliver to other places. Many countries we can reach. With that, I'm speaking to folks around the world. Aside from, obviously, all of us are reading the news. So we very much know that the countries, the BRICS countries, for example, Brazil, Russia, India, China, South Africa, and are expanding. And they launched already many years back the AIIB, Asia Infrastructure Investment Bank, the new NDB, New Development Bank. A few other structures are coming to life, and all these structures are trying. The more we put an embargo per se or sanctions on some of these countries, it's backfiring right now. With Russia, with us putting a sanction on Russia, they're no longer relying fully on the dollar. Now they have bilateral trade agreement with many countries, and namely China, to deal in the yuan and the ruble. So perhaps having the power of the petrodollar is if it's not used the right way, it could backfire, because people trust the dollar as much as a as a pragmatic unit of exchange. If it becomes a political unit of exchange, people won't trust it, right? Now, I guess we're entering in political and territory, but those are the interactions, right? So if you hold the dollar to my head as a gun, I'm going to take away the dollar, and that's how those countries are thinking. And many, even allies of the United States, are seeing the money printing, these policies, and say, you know what, we want to deal with these other countries. We want to sell to them, and we are willing to take their currency. There's even Australia, they have a bilateral trade agreement with China, to my knowledge. South Africa and Brazil, they have a bilateral trade agreement, with trading with their local currencies. Many pockets in the world are now dumping the dollar, the euro, not fully, of course, and the pound, to utilize their current currencies. Some even are bartering right now, flat out, with gold. There's governments in Africa that I hear chatter, I want to buy this, and I pay with gold. And that is good for them, but that really further alienates the dollar and further makes it, less and less valuable to the international community, plus to us as United States citizens and users of this currency on a day-to-day basis when we go to buy water or bread or other utilities that we buy.
Yeah, that's a very good point. And it kind of brings up an interesting, conversation I had. It was last week with the COO of Dakota Gold Group, who is a large exploratory mining, large precious metal exploratory mining company, and we bring up some interesting questions, and I kind of think it really flows well right into here of talking about different trades and sanctions that we're seeing, and especially as it relates to what happened during supply chain issues with COVID and everything that happened right there. And you mentioning that gold, for lack of a better term, is very strategic. I don't necessarily know if it falls into the category of being a strictly strategic element, as governments and militaries like to say things are, but for the mechanisms of trade and industrial utilization, it certainly is. Now, what some people are and larger companies are doing are saying, hey, so much of the actual raw production of gold is done outside of North America, or it's being done outside of continental Europe, and how to kind of bring some of that stuff back in-house, and with increased supply and reduced tariffs and shipping and everything, also been helping to drive some costs down. Now, just in the general context of looking at that, what are some of the trends that you're seeing, at least when it comes to production utilization? Because that is certainly something that doesn't move very fast. To tool up a gold mine is not something that you do overnight, and it's not something you do typically within a year. It's a lot more of a strategic look at things, 3, 4, 5, maybe 8 years down the road. But the the tides are shifting when it comes to production and where people are looking to actually have this stuff mined. So one, kind of where are you seeing some of those trends move? Is more and more coming back to North America? Is stuff moving around from out of Eurasia into more continental Europe or different parts of Africa? Where are you kind of seeing some of that stuff happen? And also, what do you think that might have in store for the pricing of gold in the future?
So part of our vertical, Sea Gold Technologies, and as I said earlier, Great American Bullion is the online brand for the retail side. Part of what we do at Sea Gold Technologies is we focus on the entire gold vertical, from the mining to the trading floors to integrating with financial market participants. So the reason why I'm saying this is because I get calls. So I get calls from folks that are either raising capital for a mine in Burkina Faso, or mining operation in Libya or Indonesia, or or a refinery in Saudi Arabia, or expanding production in some African countries, other African countries. So definitely there is a heightened interest in investing in mining operation by mining groups. There is I was in Singapore in October, and I sat with a large jewelry producer. And this jewelry producer does not take cash. So basically, he sells his jewelry against gold bars from his buyers. So he has, we're talking billions of dollars of transactions. So he will send his team, and they will deliver the jewelry, high-end jewelry design, and then they collect in physical bars. And he himself was, when we discussed, is interesting in mining. So there's a high interest in this is from my own interactions over the past 12 months. There's high interest by folks that I've known for many, many years in exploration, mining, refining, and becoming part of the gold vertical. And because of our history, and prior to gold, I was in the diamonds since 2003, and and other facets of consulting in the precious metals industry. I get those pieces of information directly from primary sources. So I guess the answer, where do we see the trend? Where there's an opportunity. And people are, the unfortunate situation, our strategy as many see, is the use of force to influence some countries, right? And with their I like it or not, or their we like it or not here over this podcast or webinar, politics and policy does influence portfolios and gold. So it depends on how we present ourselves to potential allies. We're gonna get a response based on that, And nowadays, with many other countries going with money and investment, they're gaining more territories over such rich countries with resources.
Great. And I think it's a good point to kind of transition a little bit into the back end of this presentation on different things that are out there as far as, what types of things people can actually look to buy. But it's the transitional question I want to ask you is kind of based on, how people buy and acquire physical precious metals. When it comes to let's say investing in a company, it's easy to look at, pick on Apple for a second. You can buy their stock, or you can buy, an iPhone, and that iPhone will certainly depreciate. It's never going to be worth as much as when you walk to that Apple store. And the stock price, traded on an open market, has a multitude of different factors that go into it. Now, with gold and precious metals in general, that paradigm is significantly different. If I walk into a gold broker and buy a 1 ounce gold coin, the markets that trade that, whether it's the Chicago Board of Exchange or the New York Commodity Exchange markets, are going to not have maybe as much of a correlated effect on what the value of what I'm holding in my hand is. And my real question is that, there's, again, several different ways to invest in precious metals. One is buying the physical, physical thing that you can stick in your pocket. The other one would be buying some type of paper asset, whether that is some type of, exchange traded fund that bases its value in gold markets, or directly buying and trading on commodity markets. How much correlation, from what we're talking about as far as external factors and everything, do the market makers on like the Chicago Board of Exchange have on the underlying per ounce value of these precious metals?
Commodities exchanges usually they're dealing in contracts and futures, right? These are always trading on paper and trying to maximize return for short term. It's a different strategy. There's also, like you mentioned, the ETFs, and then there's the mining stocks, which is another aspect. People that are buying physical gold, they usually want something outside of the paper system. They want it in their home, or even if it's in storage with their custodian, they have the ability to take in-kind distribution and have that asset in their hands. So most of the folks, and the gold market, to put it in perspective, is a $11 trillion market, roughly speaking, and it probably is more now as the demand goes higher and the trading of it goes higher. It's roughly $11 trillion with 9% of that roughly in physical, tangible gold. According to the folks that I speak with on a day-to-day basis, let's say you have an IRA with a custodian, not like Advanta, that allows physical metals, right? You have one of those, let's say, I don't know, T. Rowe Price. You have a 401k or an IRA with that company. Usually, that company does not offer physical metals. So when the client calls because they're concerned, they want something tangible, their financial advisor will do the best thing they can do, because obviously they look out for the client. But unfortunately, their best is not enough sometimes, right? Why? Because they cannot tell the client, hey, take your money and go to Advanta IRA, for example, or Great American Bullion and buy gold there. So they will offer them the paper alternative, and there's nothing wrong with that for people that are looking to diversify that way. But for those that want something tangible, they want to take away the third-party risk. They want to have something in their hands to either give to their kids directly, or family, or keep in the safe, or in a safety deposit box, or whatever they want to keep it. It doesn't serve the true purpose. So part of what we want to do, and our goal here in the greater scheme of things, is enable those financial institutions to offer the solution to their clients. And in essence, every market participant affects the price. To answer your question with regards to how do these affect the price, of course, the more the news affects the price. The more people talk on the news about gold, the price goes up, because that's the nature of it. But what the most important price driver is the bigger picture, the inflation, in my humble opinion, and the other factors we discussed, the geopolitical situations around the world.
Yeah, no, great. And now looking at the context of what exactly is out there on the actual physical market, because it isn't and isn't. All precious metals are and aren't created equal. If I buy something that has a certain purity standard, but it's just a raw gold bar, versus buying the same amount of gold in a, let's say, a American Eagle, if you will, they're priced differently. And I think people are always curious to know why, and where some of the pricing comes in to the effect of all of this, right? So if you can maybe speak a little bit to that, because at least right there on the slide you have right here, you have two 2.5 gram gold bars that are, they're only $3 different, but $3 is $3. Why does the pricing come into effect differently for different products that are out there in the market?
Thank you. Understanding the product. So there are two types of gold products. There's what's called bullion, which are bars and coins. Bars are coins that move up and down in correlation with the market indicator, or the paper market, the spot price. And those usually are price elastic. They move up and down the market price. The other asset is called numismatic or collectible, for those that are collectors. Now, most people are not collectors. They buy bullion bars and coins. Now, I've always been an advocate of. That's why if you look at this the slide here, you see price low to high. Gold is gold. Whether it's a PAMP bar you're looking at, whether it's a Volcambi bar, or whether a Chinese panda or whatever, gold is gold. It's 99.99%. Now, some people would like the color orange over the color blue, or the Chinese panda over the Argor bar. Just that's a personal preference. But as far as the value, they all have the same value exactly. The difference is by, once you choose, you see on the left, we have type, we have weight. Under there, you can see on the screen, we have purity. as you mentioned. So the difference becomes in, okay, I'm going to choose an asset. Let's say I'm going to choose a kilo bar, right? Whether it's from Royal Canadian Mint, Johnson's and Matthey, all kilo bars usually are 99.9% or higher purity. It doesn't really matter which one I buy, right? So what matters is the utility. Why am I buying gold? If I'm buying it for barter and trade, then I want to have something liquid. I will buy a gram, a tenth of an ounce, a quarter of an ounce, perhaps a half ounce. I don't want to buy a big blub that I cannot liquidate if gold is at 2,500 or 3,000 or 5,000 or whatever the price of gold. I want to buy the $100 bills, those grams, right? For example, if I'm buying silver, for example, similarly, I would buy, I can buy the ounces, or I can buy my $5 coins, right? $5 coins, 10th ounce or rounds that I can use for regular, again, barter and trade. But I'm looking at two items here. One is $5.13. One is $5.36. Why am I paying 23 cents more? And why is it different? This particular difference, to answer your question about two coins of the same size, same purity, it's strictly from the mint and the premiums mandated by the mint. For me, it doesn't really matter which one. If I'm looking at the screen, I'm going to buy the cheapest available asset that is available, right? So in this case, I would buy that round includes. Now, some folks will say, you know what? I do want to buy the American Eagle. Now, the American Eagle is a very well-known item, right? It's an American coin. It's been around since 1986. They've been minted in, and it is 91.67% pure. People like it because it's American, right? It's a U.S. coin. Now, there's that aspect. That's kind of the personal preference. But from a gold perspective or silver perspective or an asset perspective, the what to buy, the answer to what to buy usually, which we have a slide about, it's really answered by the actual client, what to buy. You choose the type of metal, you choose the size, depends on your preference, then you choose the purity, and then you choose the source. Some people just focus on the first two. I want gold, small size, done. Right? If you're buying $70 million worth or 1,000 kilos, you probably want to buy them in kilo bars, right? But if you're buying 100,000, 500,000, million or two, or less or more, 10,000, all that, you want to have something that is liquid, potentially, that you can use. And again, you can just buy the largest or the smallest. We have all of them available, and they're available in the market as well.
Yeah, no, fantastic answers to the questions. We had a couple that, since we're getting up towards the end of this, had a few questions that I want to get addressed. To the individual asking about potential partnerships with getting involved in Great American Bullion and what that might look like, I'd recommend asking that offline. Sami's information is up there in the top left corner. You could email or contact him directly. With regard to like partnerships, just probably the best format for you to do that. But a question here that is a good one.
Alex, can I give my direct email here?
Oh, absolutely, certainly.
S as in Sam, C as in Charlie, at greatamericanbullion.com. Feel free to email me and we can discuss.
Yeah, and someone asked, and I think it's a very fair question, why Great American Bullion? Why go to a, retail and go to someone who's a wholesaler or broker that can provide discounts? I think it's a fair question, and everyone has their own place in the market. So I'll let you answer that one, Sami.
Thank you. So very, very, very important and good question. Why Great American Bullion? Why not go to other people that do discounts, right? Number one, the key answer to this, if somebody's giving you a discount, you're paying for it. Have you been to Macy's when they have 80% discount on diamonds? They're not selling at a loss. At Great American Bullion, we do not have discounts because we price our, and our prices are live. They update every 15 seconds for, this is live pricing. You can hold us to the fire and compare us to anybody, and we're happy about that. And why did I do this? Why did we do it this way? Because I don't want to disparage the other competitors, but if they can charge a little more, they will charge a little more, right? Everybody's in business to make money, right? However, there's some companies that really overcharge. They'll say, if you buy from me today, I'll give you 15% free gold if you buy $100,000. Do you really think they're going to give you $15,000 for free? It means that they have marked up their asset enough to not only cover the 15%, cover also the ad on the TV, also cover the their commission they're paying their sales folks, also cover A, B, and C. Here, we don't have commissions because it's online. You're buying directly online. We do have customer support team. We take care of our customer support team, of course, but our margins are very slim. We and actually, I believe we're the only company that bridges between the online pricing, which is one of the lowest pricing, and the white glove service, whereby you can call and have an account representative or executive help with with your transaction, and everything is streamlined. And what we focus on at Seagold Technologies is the technology aspect of Great American Bullion and all the services we provide. That's why you can see everything integrated. You can do a full transaction from A to Z online. You can do your IRA online. Obviously, you can call Alex anytime because Alex is such a present representative of Advanta IRA that our clients, even if they don't call us, they call him directly, and he will guide them through the process.
Yeah, absolutely, Sam. I think that's a great answer to that question. The last thing that I always like to end off on is, what do people, at least in the current market, need to be careful of? It's when something is extremely popular, the position for people to take advantage of that to a not a very altruistic degree can certainly crop up. So, we've kind of covered the larger macroeconomic, factors that go into, hey, here's what might happen, here's what might affect pricing. But at the end of the day, kind of where the rubber meets the road, what do people need to be careful of when it comes to investing in precious metals? Certainly if someone walks up to you on the street and says, hey, you want to buy a gold coin, I think people hopefully would be skeptical of that. But again, on the kind of, the functional aspect of this, what do people really need to be careful of? And what are you seeing as far as issues that people are running into in the market currently?
The number one, relates to the other question, the promotion question, right? The number one, if somebody's offering you something for free, it's coming from somewhere, and if you're the buyer, you're paying for it, right? So, the key to this is, do I want to? Okay, I'll give you an example. I have a client, and this is actually recent, a good client of ours. She calls me because and she says, I want the best deal. So I took her to the side. I told her, choose what you like at the particular size selection that she had. And she chose 99.99% pure Britannia. They were at that time the lowest price. These are engraved on them, on the coin, the asset, and all that in it too. She calls me later on. I spoke to my friend. He buys them certified, and she's talking about the numismatic. I told her, you asked me for the best deal. The best deal are those there. We guarantee everything we sell for its purity, and they are minted by the government of from Britain. She said, but I want the certificate. I said, all right, I will change it to the certificate, but there's a cost to that, right? So the answer, what to be concerned about, number one, three things. Number one, gold is gold. You just want to be buying from a company that is trustworthy, they have a great name and good understanding, and they're not going after all your money. Stay away from a company that offers you a lot of promotions or goes for your entire portfolio, or uses oh, if you're not going to do it, you're going to lose everything, all that stuff, go with a company that has everything transparent, listed online for you to examine, and they don't mind being challenged with being compared to. And then the last and most important item is follow your instincts, buy what makes sense for you. It doesn't matter what I say, or I'm here to provide information about what I sell. I will always be a Great American Bullion, right? So I'm interested in helping you acquire precious metals, but follow your heart, follow your portfolio. If it makes more sense to buy the large 1 ounce assets, then buy those. If it makes more sense to buy the liquid assets, then buy those. And that's, I think, my humble advice to whoever's listening.
Great. And just one last question before we end it. I want to make sure we get all these addressed. Does Great
Sure.
American Bullion provide storage, or are you not
Yes.
in that business? You do?
Yes,
Okay.
so we do, and on our site, if you go to the site, let me see, we actually we're not a storage company, but we provide storage through C3 vaults that we work with. They're similar to the Delaware Depository, IDS, and many depositories. We also work with Brinks. We can store in the United States, in Canada, in the US. We store in Delaware, Vegas. We can store in Texas. We can also store throughout Europe, Frankfurt, and Switzerland and London. We can store in Dubai, Hong Kong, and Singapore.
Great, awesome. And there was one question, but we're running out a little bit of time, and functionally it doesn't really work. If you could maybe give your information again out there. Someone asked if you could show like maybe an example of navigation of how to go through your site. Don't need to back out that far.
Okay.
Yeah, just if you, to the individual that asked about how to navigate through the site, just reach out to Sami directly, and I'm sure he'd be happy to give you a demonstration of all of that. So
absolutely, I'll be happy to do that. The first thing you want to do is log in right here, and then everything is online. Once you click the product, basically you can put it into the cart and you move forward. Anytime, give us a call here. But I know we're running out of time, so I'll let Alex wrap it up. You can reach out to us anytime.
Yeah, great. Well, again, Sami, I do really appreciate your time today. I really enjoyed getting to go through some of the higher and mid and lower level issues that are running into the precious metal markets out there today. If anyone has any questions for Sami, the information is right up there on the screen, or if anyone would like to reach out to me directly on the IRA side of things, I can always be reached at Perny, that's APERNY at AdvantaIRA.com, or directly on my office line, 727-754-9954. Again, Sami, thank you so much.
You're welcome, Alex, and thank you for having me. I don't know if on this slide people can see www.greatamericanbullion.com. Or yep, the phone number, which is you have on the prior slides. But Alex, thank you so much. Thank you everybody for listening in, tuning in, and it's a pleasure being here.
All right, thank you so much. Bye now.